Alright guys, 3 tools to help improve your entries in the S&P. One of them is footprint. Footprint is going to be very good at giving you precise entry points. However, an entry is only one part of the trade. So the other 2 tools are all about defining why do you want to enter there before you bring your footprint out, and where do you think this is going to go and how's it going to get there. They're the first 2 tools, so we're going to come to footprint in just a little while. We'll cover all of this in an upcoming webinar, 3rd of July, so click the link below, you can come join. But with footprint, it gives you refinement. The first thing, and it's simple, people overlook it, is just a straightforward candlestick chart. What does a candlestick chart give you? Well, a candlestick chart gives you scope. It tells you where a market can potentially get to. And that's the first thing that you're interested in. Now, if we take a quick look at the chart that we've got up on the screen, what we've got there is the S&P trading at record highs. Now, with it trading up there, and just to give you a little bit of a clue, this was post Nvidia earnings. Now, I'm sure we can all remember what happened. The S&P sold off. Now, with it opening above record highs on the New York Stock Exchange cash open, S&P's opening, you've got an easy area of support, 49, 47, 45, the 3 previous daily highs. As long as you stay above, the S&P is going up. So this is what candlesticks give you. They give you this kind of line, this scope of saying, there's your zone, above there we go up, below there we can go down through the recent range towards 06. That's what you use in a candlestick chart for just defining the scope of movement. If we do one thing, we can do this, and if we do another thing, we can do this. That's great. But the next question then is, let's say we do get back below 49, 47, 45, those previous highs. How do we get down to 06? What happens along the way? And is there another area that gives you further detail on whether this is actually going to work? And this is where you bring a profile in. What the profile does for you is shows you the last place that buyers could come in. Now in this example, what we can see is the VPOC right towards the high of the previous day. That's the highest volume traded price. This is where everyone was happy. That's at 41.5. You can see the little red highlight on the chart. So that's the point where buyers are pretty confident that this is going up. Sellers are confident this is going down. Now, one key element of profile theory is that areas with high volume are easily traded across, either traded across or bounced from. So with this, if the market is going to go down, and remember it did, for that trade to work, we need to see it cross 41.5 quite comfortably. That is the final bit. That's the bit that says, yes, this move is on. You've eliminated the last chance for buyers to come in. And now you can expect to move down. You've got the value area low, which is around 17, and then you've got the 06 from the chart. But because we haven't got much volume below there, the profile's telling you we can spend some time down here. And this is where you can expect rotational trade. This helps you understand the nature of the action. Finally then, footprint. This is the bit that refines the trade, that gives you that real detail as to where you want to be in on the trade. So we can say 41.5. From a chart, you'd say you want to be short below 49. Profile says 41.5. Footprint then, when it comes down there, what you're looking for is all of that volume being accumulated above 41.5, above that little red box that I have on the chart. Now, once we move through that, and the key bit, look at the footprint when the market trades down. Very little volume traded as we move out of that little red box. That's what footprint helps you with, because what that's just shown you is, one, the initiative from sellers. So it says now go for it. You've built the energy up above. Now you've got the direction. Now you've got the move that you'd expect to see from a profile perspective. You've got it, the footprints have defined it for you. You need to be in, and you've got a very well defined stop just back above that little red box. So it's quite a small stop. What this further helps you with as well is price memory. You've seen precisely where that little switch came, that little twist over of sellers gaining control. So when we go back there, The next time, which comes a little while later, the second time we retest that 41.5, we go and look at the chart. What you see is that area where there was very little volume previously now has that 1,000 lot. It's highlighted, the little red arrow. There's 1,000 done there. This is people trying to buy and still not getting the move up. So the area where sellers had control previously repeats. That gives you your second chance to sell 41.25, 41.5, 40.5, being precise, that being where that large order came in. That's where you want to be short. Expectation then is we can rotate steadily down the range, down towards 17, 15, and then 06. So it's all about bringing the three tools together. It's about understanding what they're used for. Candlesticks give you scope. They give you areas that you want to be involved in. Profile tells you how it's likely to trade. That zip through 41.5, the two directional trade down towards the bottom of value. Of course, there's understanding that needs to come into this. Is this something that we'll cover on the 3rd of July? But that gives you that scope. And then you use the footprint to refine and define precisely where you want to get into a trade. That's how you improve your entries. If you want to see more on this, click the link below. I'll see you on the 3rd of July. Catch you then.